In 2023, we've had a lot of readings, fear and of course greed. But what happens when you enter extreme greed? Something that we just saw happen over the last 24 hours. Today, we need to discuss that along with Goldman Sachs' new target for 2024. The Magnificent Seven were up over the last 24 hours, driving the markets to a higher level. But how much higher can we go? Are we about to enter the twilight zone for the S&P 500? Today, we discuss the next big levels ahead, along with the biggest dark pool trades that just happened in the equal weighted market, an area that everybody's been trading over the last 2 weeks. So what's in store next as the Mag 7 breaks out? And is this some type of false breakout? Today, we uncover the secrets of the market right now. Well, welcome back everybody to the Daily Show where we talk about markets around the world together. My name's Tom. We're covering stocks, commodities, and cryptos today, and we've been doing this show for over 3 years. So if you like those markets, remember to subscribe. Let's get into what happened over the last 24 hours before we do and cover some macro and data points leading into the end of the year, which I think will surprise you. First up, Nvidia, Google, and Amazon. They were the best sectors in the market. The Mag 7, including Meta, were doing very well. And Costco had some interesting dark pool transactions we'll talk about later on, but it was running higher and it's been running for a little while now. What were the best sectors? Well, as we kind of suspected, energy had a decent day until it started to rally over after hitting the most traded zone, which we'll discuss later on in today's video, and metals came out to play. So really there were two inflation-based plays and the rest was just the Mag 7 driving this market higher. When we look at the last 5 days, it's been rotation, rotation, rotation. Small caps all coming up. But as we mentioned, things like TAN, which is solar, we're all hitting the 20 weekly moving averages, which can also be considered mean reversion. So if you're a bear, it kind of hits some of those zones that you'll be looking at and kind of saying, well, you know, if we do see a big rejection from here, that could be a fairly large deal. If you're also interested in finding out more about the markets into 2024, do remember to subscribe to our VIP free weekly newsletter. We've got a copy coming out in less than 24 hours. So just remember to subscribe if you're watching this video so you can get hold of that. So let's talk fear and greed, because as you know, when extreme greed happens, we need to be ultra cautious. Well, over the last 24 hours, this is exactly what happened. You might be asking yourself, how did this not happen before, considering what the market's done? Because of the speed at which the market has moved, it's taken a while for some indicators to come in. But finally, extreme greed is here with a 50+% sentiment reading, which we'll need to talk about later on. So what is one of the main reasons why the market is up and whether it can drive a little bit higher first? Well, the Fed has ensured excess liquidity has continued to rise. Remember that bank crisis we had back in March? Yeah, ever since that point, we've really seen a massive loosening of financial conditions, bringing us back into close to kind of the average over time in terms of excess liquidity in the markets, especially since the global financial crisis. Now, you'll notice when you come off these bottoms, you've often come off a significant low and you do end up driving higher over the next coming years. So it's something to keep in the back of your mind when you're looking at excess liquidity. What about SPY ETFs? Well, we just saw a huge increase in the amount of inflows coming into SPY ETFs. Whether that really matters or not is questionable. But another thing that came along with that was, of course, CTAs. We saw CTAs dropping as we went to consolidation. And then as we drove out, thanks to the Fed's speech last week, we saw CTAs come in big time. It basically means it's relatively supportive of this price. And you'll find in the options analysis we do soon, it could still be a choppy market this week with a drive to 4,800 not off the cards. And we'll go through why the options market might want that very soon. So let's talk dumb money versus smart money. And dumb money, of course, often considered us, the retail trader. What happens when we get super euphoric like we've just seen over the last couple of weeks? Well, similar to what we've seen in terms of the fear greed index, it's not really a great sign. And it means you have to be ultra cautious and not ignore the bearish signals if they do end up coming up. Now, 3 months past these types of signals, you tend to get pullbacks. You can see that we sometimes drive higher though first, and that's all part of the trapping cycle. So do remember that only one time in the last couple of reads have we seen this fail, and predominantly it's actually been a fairly strong indicator to be ultra cautious in markets. Let's discuss why we could be ultra cautious, but also why the market may not crash yet. Well, it has a lot to do with, of course, exposure of the options. And do remember, the actual biggest next option expiration is the end of the year. So end of the year, we do have a massive options expiration, and that's kind of what started in many ways what happened in 2022 at the end of 21 into 22. And we often do get some illiquidity around that time as well, which can start some volatility. So here are the examples. 4,700 to 4,800 would be the perfect result for the market this week in terms of gamma exposure. And as it turns out, it would also be good here if we're having a look at the IV charts. 4,800 being the preferred strike that the market would gravitate towards. You can see here that there's quite a lot of supportive power between 47 and 46 as well. But I would say 48 seems to be what's looking at as a target. It just so happens to also be a pretty good technical target on the SPY and S&P 500. So we'll look at that later on today's show because you will be surprised how decent it is. Let's talk oil. So oil has been massively sold by CTAs. About a week or two ago, we started to see supportive power as the market came into a very critical point. Of course, here's the technical we saw. And we've been looking for it to reject and come back up. Now, that's been an okay trade. Actually, the last three sessions have been relatively good for oil. But could there be something more in oil in terms of the short-term signals? Well, oil options signal post-OPEC plus sell-off may now be overdone. Of course, we've been absolutely trashed on in terms of the oil price. Brent put skew begins to rebound into the year end. Here's the rebound, and it could be supportive of price, at least for some chop and upticks. And this is all the things that we've already been on the channel talking about for the last kind of 3 to 4 days. And one of the main reasons is because it was such a hated sector. Now, it's all about timing. Timing is everything in these markets. And of course, that's what we saw. We saw timing, we saw a decent technical, and of course, it was a decent reward over the last couple of trade sessions. But could there be more? We'll discuss it later on. What about the momentum flow? Now, whether you have RSI in your charts and you're a technical reader, a MACD style indicator, or of course, you've got percentage of stocks above certain moving averages, we all have overbought signals. I mean, I don't think it's a ridiculous concept to say that every single one of your main indicators is probably going to be overbought. We've got extreme greed. We've all got these things. Now, remember, markets can go for a little while. So let's talk about some of the trails that we tend to get. The first one is the Xmas rally. So basically, we see 34 to 16 over the last 50 years, and that's a pretty strong read in terms of the bulls. What I think is more interesting is the breakdowns of the day. So we see day one, which is the Monday, a positive session. Day two, which is the Tuesday coming up, actually a negative overall session across the board. And then Wednesday, Thursday, and Friday having some nice Christmas cheer into them. Don't forget the Grinch this year, +3 and +3 after Christmas. This is one of the stats that we'll be looking at incredibly closely. And of course, we'll be tracking that. So let's talk about longest run streaks as well. You might be saying, well, of course, the markets are going to sell because we just saw 7 weeks up, Tom. I mean, it's unbelievable. We cannot go any higher. It's just not possible. Well, unfortunately for you, the stats may still kind of give us the idea that we could run a little bit higher. We need to find price action turns specifically in the S&P 500, and we still haven't seen it. The DAX has been weak and others that we'll show later on, but not the S&P. And if we look here, you can see that a 4-week win streak from a 7-week increase is pretty high, 16 to 4. Those types of odds are still very strong. So over the next couple of weeks, it's still expected that markets will drive higher. But as many of you have said, March could be a big point of 2024. And I think a lot of people are saying this because that's when they expect the Fed to actually put the first rate cut in. And as we know, if we do get a rate cut, and more importantly, if we have US 2Y versus US 10Y starting to uninvert, this will be one of the big causes. Remember, when that does happen, you don't really want people to be talking about it. Maybe just this channel. Make sure to subscribe if you're interested in those types of things. What direction do AAII members think the market's going to next? We got that record big read, 51.3%. But really, the big thing here was a 6-year low in bears. I'm interested to see this week's record report as well, which we should have on the Friday show or Thursday show in terms of the close. Small cap versus large caps. We've already talked about the idea that small caps do well. Funnily enough, when we bought this up on December the 11th, over the subsequent days, we managed to do the full average percentage and hit first take profit targets. So the Russell has hit some of the targets, but still, technically small cap should outperform the S&P from December 11th to February 11th if it's going to trade like similar years. As we put into our weekend show, the Russell 2000, after a 38% of the Russell 2000 stocks register 63-day highs, does tend to have some pretty nice stats with it over the next 6 to 12 months. So it's, take it with a grain of salt. But of course, if the technicals are supportive of that idea, it can be quite strong. We also saw options supportive of the concept that the Russell would drive higher. This is a bit of an older chart now, but it has come true. And of course, if we believe seasonality, we should still be seeing some pretty long strength in the Russell over the rest of 2023 into 24. Let's talk S&P 500 2024 targets though, and what could happen. So of course we have Tom Lee's Fund Strat coming out and saying 5,000 plus. I think it's 5,200. We've got Goldman Sachs claiming a 5,100 in terms of levels. And there are many, many analysts now going for between the 5,000, it seems, and the 5,200 overall. That marks around approximately plus 8%, kind of on average, from where we are in the markets right now. And of course, they're banking on this type of concept that we will see in the election year a strong market. We'll bring the stats as we close into the end of this year, and we'll talk about what the main scenarios are, especially once we've seen the Grinch and all of these types of things. But these are two of the types of things that you do tend to see around Fed rate cuts, which is a very bullish market or a very bearish market. And you might say, well, that's not very helpful. Well, at least you know it's not usually sideways. That's one good read. But really, it's about growth. So it's going to be about earnings from stocks next year. So remember, pay attention. Let's move on now over to dark pool activity. And first up, we've got equal weighted market. An equal weighted market shows two large trades right at the peak. At the same time, we've got a big one down the bottom. So could it be take profit targeting into the end of the year? It seems very plausible. And I think we're also starting to see a bit of rotation out of some of these very hot, easy pickups. Now people have gone over to XLE, metals, and maybe even the Mag 7, which we've started to see come back over the last two major trade sessions. Let's also talk treasuries. We know that we're at supply. We know we have massive transactions. Might be time for breather on treasuries. And Costco, one of the hottest stocks in the market, just put in massive trades across the board. So let's go over to the options. And first up, we talk about how many there's been. Not a bad day, 37.5 almost in terms of total options volume. Another strong call volume day, which has been pretty considerable recently in terms of overall calls. And we saw retail doing 29% of the overall options. When we have a look here, you can see that Tesla is putting in 2-to-1 on the calls at the moment almost. And that was driving higher, and we ended up hitting 257 and then seeing this huge rejection candle that came through, opening up two very significant trades, I think, as we hit the most traded zone of the last kind of rally and movement. Another thing I wanted to mention here was that we have quite a lot of large transactions going through for a few stocks. Costco also getting 3.79 times average volume. We've had a large amount of trades on some of the Mag 7. Amazon notably doing 1.49 times average volume. And some of your favorites that might be in here have shown up a couple of times. Let's jump on over into the markets though and talk all the things indicator-wise and of course price-wise. First up, we've got effective yield rates. They've been dropping off. That's supportive of the market continuing to bull run. We did see the first shaky sign in bonds indicator though. Take a look at this, a little rejection here from what has been an absolute vertical run for bonds. The first sign of weakness that we have seen since October 23rd. So it's been a long time for that one there. Let's go over to US 2-year versus 10-year. No change here, so we haven't uninverted or anything, but keep that on your charts. Consumer discretionary versus staples, still very strong in the markets. The US 10-year getting close to a point where we expect some kind of supportive pressure for the 10-year. However, there are some stats I'll put in the newsletter that do drive into over the next 1 year, the chance of the US yields being this high still is very low. I think it's only like 23% chance that it's still at this price. It's usually much lower. So that's interesting because, of course, you might say, well, duh, it's going to be lower. But a lot of it's already getting packed into price. So, yeah, I mean, it's expected. But at the same time, these are stats that are actually showing that usually we will go lower over time. Let's talk treasuries because, of course, we have some of the largest transactions coming through in recent days, all at this previous support level that's becoming a bit of a resistance. It's what we call role reversal. And this is a point where I would like to see treasuries have a bit of a weakness into some strength later on. I'm still very bullish on treasuries for 2024. Nothing has changed there, but still better to see it have a little bit of a breather. It's a more healthy market. PCC, put call ratio, just in the middle, nothing much to report there. However, we did see a huge read on the call side in comparison to puts only last week. So that shows you that there's a lot of money to burn on the upside, especially if we see some of those gamma positions start to change. What about home builders? Well, they've put in 2 days of weakness now after what's been a pretty parabolic rise. Certainly a little bit of a problem here, and one of our leads, again, with something like bonds to tell us that, you know what, it's the first time we've seen weakness in quite a period. Dow Jones Transportation Average also putting in a bad session. So again, some signs of weakness, not enough to really go off yet, but something happening there. What about central bankers? Central bankers pulled back slightly, but let's be real, they injected so hard over the last couple of weeks. Of course, that's very supportive still of the bull case. Copper, that was a little weaker. No change, no ability to get past 3.93. No breakdown. Obviously, doji here. We'll keep on the copper bandwagon when we get more information. And when we go over to the US dollar, you can see that it's holding its own. But I wouldn't really say it's really strong because, of course, this is just a rally back to what was supply. So really, it's still resistance. Now, because it's coiling here, and you can see it's sat around here for a while, it would make me think that the US dollar is going to try to break higher. And if it does, then we've got this gap to fill and possibly all the way up to 103.50-ish levels. So there could be a day trade in here, or at least a little swing for traders that are willing to take the side after a coil. Remember, a coil in markets is a burn of time. So it's actually a pullback in time. But at the same point, if it does break to the upside, it will have trapped some shorts in that aspect. Let's move over to gold. So gold does show some weakness. Most traded zone was rejected. This was actually an excellent trade to get into the short side. We've been talking about it for the last 2 days on the markets. And realistically, it's an excellent trade to get in on the short, but you really do want it to short. I mean, I want to see a new low on this thing. If that starts to get taken out without strong rejections, you're probably going to get squeezed to the higher point, and gold might even go back to 2070. Remember, with gold, we don't expect huge moves because we're in consolidation after that huge blow-off only a few days ago. Let's go over here to US oil. Now, this one actually worked pretty much perfectly. We got into the first level of supply. We hit it. We rejected it. I'd still like to see oil kind of drive higher. Now, there are some cases to be said that oil can do so. You can see here that it's been very sold off down to a beautiful demand level, but we do still have some really big strength coming up. So obviously, the chances are that if we do rally through, we're going back up into these prices up here, which will get towards 77 to 78 a barrel. I'm not sure if we can get much more than that. We'll look at oil stocks in just a moment and check it out. Now, what about Tesla? Most traded zone, big level here, heavy trade, big short. Now, it suggests that it might have cracked out, and obviously it's got bears in it. But I'm going to set an alert above here, because if it does get above this high, it's going to my watch reaction here level, at least from a technical standpoint. So we can kind of play this a few different ways. If you're a bear, you're looking for a follow through over the next 24 hours in Tesla, a new low, maybe a new low underneath this daily candle here, underneath 248, and that to signify, okay, this was a false break to the upside as well, and it's going to now punish down. But it makes sense because it is a heavily traded zone. It's also a massive fib of their overall pullback. So this is a zone that I could see shorters or bears at, which we've discussed. If we get above here, though, we're going to put the squeeze on. And of course, with all of those options, especially the call options that have been opened over the last couple of hours or last 2 sessions, that's going to be a pretty big deal. What about energy stocks? Well, they got up to kind of their first little take profit target for some day traders and then rejected off. This is in line with also one of the most traded zones. But you can see here we've got that island reversal support. We have decent volume across quite a lot of oil stocks at the moment in terms of finding bases. And if we do manage to get above the previous session high, I could see some breakouts moving back up to prices such as 87 for the energy sector. So it's a sector that's been beaten down. It's probably one of the worst rotations at the moment. And I would say that we're looking for some strength there at this stage still. What about German 40? Well, this is the market that's really getting hit. Now, for shorters, you'd be kind of happy to see it make a new low. Obviously, we spoke about the German 40 having some of the retail traders that got wiped out. We went from a level that was almost 90% retail traders trying to short the market to all the way down to 70%, suggesting that people got liquidated on this one. And why not? It hit 17,000, which is a huge psychological number. Because we have no structure on the left-hand side, we are only on small timeframes at this stage. And really, any short that was entered into here should be basically broken even at this stage. We made a new low. So could we drive lower? I would say yes, it's certainly possible. 16,500 would be the next target for it. And that would take us into the previous highs. So look, the DAX is showing signs of weakness. You can see here on the daily, that big rejection candle. I don't see any strength here in the DAX at this stage. All right, let's take a look at the Australian 200 stocks now. So inverse head and shoulders completed for a bit of Christmas cheer. I think most traders would be very happy with this take profit target. And I've been asked, what do I think next? Well, pending Chinese New Year kind of festivities with things like iron ore, which have broken out at the moment, and maybe energy picking up, a huge two sections of the Australian economy, there's a chance we actually may drive higher through this period. But ultimately, we will come down to the US. So you're looking for breakouts here to maybe get us a new all-time high, because I think if we get up to 7,600 again, we're probably going to break out and get above it. Let's go over now to the US 2000 and have a look at what's going on. First up, we do still have a sideways market. It hit first or second take profit targets for a lot of people. 2010 is a huge level. When we look at it on things like the weekly, you can really see what I mean. That is a massive level of supply. So I would actually like it to kind of sit around for a little bit before potentially moving higher or lower. This will give us either a distribution or an accumulation zone. And once we break out, if we do, there's going to be a good time for Russell. If we don't, then of course we could come down substantially. So at this stage, I expect a bit of sideways on the Russell and maybe to get more of a drive from things like the Mag 7 and some other stock sectors, because we did hit things like the 20 moving average weekly on clean energy, TAN, and quite a few others very, very quickly last week. Time for a little consolidation wouldn't be the worst. What about the NASDAQ? Well, the NASDAQ actually hit into the top end of the box here, almost peaking out a new all-time high in terms of futures market trade. So you can see here, we got right into the top there and rejected it off. Interesting point. Obviously, the rejection does show you someone tried to sell at this top, but it's still grinding a series of higher highs and higher lows, so no changes yet. Let's move now to the SPX, and I'm going to put this on the charts here, and you'll notice that the S&P 500, 4740. What I'm looking for, because I still don't think we're quite high enough yet, is a 4776 to 4800. And you'll notice that pins well with some of the options levels of this week. So bring in the Christmas cheer. I'd like to see it get here. And even if it does it off the Mag 7, that's totally fine, because we do need the S&P to actually hit a level that makes some type of sense. It's the only one at the moment that doesn't have weakness on it, and it's usually the more reliable index in terms of any type of real signals. So that's something that we are looking for. When we go over to the Mag 7 as well, you'll notice there's a breakout here. Now, a few of you might say, well, what about if we had some type of weakness here? What about if we rejected down? We could therefore have a wyckoff. It's possible. We'll be looking at all scenarios here, but for now, it does look like it's trying to break out. It has broken out, and maybe this will give another run onto the Mag 7 stocks. So something to be on the lookout for, and obviously momentum traders will be all over those stocks over the next 24 hours to 48 hours. Let's move over to Bitcoin. So Bitcoin did resurge, and it came back to 42,690. Now I'm looking for a new breakout low to really show us that this thing's capitulating. For shorters, you won't be that happy about this because, of course, 43.5 was a good short level, came down to break-even zone, and then it's instantly gone back up to press this zone or this area up here. I still think it's possible for Bitcoin to go towards 46 to 48 first, but I will be looking for this to tail off now coming into 2024. And really, I'd like to see Bitcoin weaken over that period of time, maybe into February, and then we start to see some strength in it again. So I feel like we're very close to kind of a topping period here for Bitcoin. It's pretty normal ahead of things like the halving cycles. So, the hype's there. Everyone went psycho on it. I think we're in consolidation to even pull back at this stage. So yeah, something to be on the lookout for. Not easy trading though in terms of the last 24 hours. You would argue at this point, considering we got through that trend line, that you'd be looking for pullbacks into longs though, if you run the really short timeframes at this stage. So what to look out for this week? Well, firstly, sign up for our free weekly newsletter if you're interested. But another thing that you're going to be needing to look out for is some of the information. So of course, we do have a few things happening here. It's not really, I would say, a massive week of everything going on. We have housing starts, building permits. Obviously, we've got some existing home sales data, a bit of property stuff. And then we've got PCE index and core PCE on Friday, which is often considered by the Fed. We've also got Philadelphia Fed manufacturing surveys and stuff. But overall, I would say that the week is not super in terms of economic news. The biggest thing here is really going to be whether the market wants to drive a little bit higher first. And I think the S&P is suggesting it may want to do so. All right, we'll be looking for the signs. Thank you very much. Remember, there is always another opportunity out there. And if you're interested in finding out more about what we do here daily, to subscribe and smash that like button. Thanks so much, guys. Bye for now.